Welcome to today's episode of the Simply Financial Podcast. I'm your host, Christopher Calandra, and I want to increase your financial IQ today with a discussion about an executive order that's being issued by the Trump administration that instructs the Department of Labor and the Securities and Exchange Commission to create guidelines that would allow employers offering 401ks to have plans that include private equity and other private market assets. A few thoughts about this. The 401k marketplace has been very sleepy for a long time, not dynamic, not innovative, been very stable for a long period of time. And one of the outgrowths of that is it was really all about less expensive, driving costs down. It became a 401k marketplace where the was a race to the bottom in terms of fees, which is not necessarily a bad thing, but this is going to upend that quite a bit. So let's talk about what this might include. It might include venture capital, hedge funds, private equity, real estate, gold, possibly even cryptocurrency. We don't know yet, but these are all open to possibilities. The Trump administration is reversing something that the Biden administration had done, which was roll back the original guidance that was issued back in 2020 that sort of cracked the door on this possibility. So it was postponed during the Biden administration, but it seems as though the Trump administration, by directing the Department of Labor and the Securities Exchange Commission to move ahead, that they're serious about the inclusion of these assets, or at least the option of the inclusion of these assets in our 401ks. So this is important because there's roughly $12 trillion in 401ks. It is a very large pot of money. And up to this point, it has mostly been a mutual fund oriented vehicle where the investment options are mutual fund centric. Are there some offerings that include exchange traded funds or maybe even individual stocks? Yes, but it's a distinct minority in the marketplace. So this would unlock roughly $12 trillion to offer these other investment options, which you could make the case would offer broader diversification and potentially, if things work out, good long-term returns. Part of the reason why advocates say this is important is because the public markets have shrunk. You don't see as many companies being public today as you did years ago. Granted, it is a massive market. What we found, though, over the last bunch of years is that the private markets are growing much faster than the public markets. Big companies stay private longer than they used to, and a lot of small and mid-sized companies choose not to go public. There are a lot of reasons for this. It's not part of today's discussion, but the idea here is if the private market is growing much faster than the public market, giving 401k account holders the option to incorporate some of their investing with these private equity and private market things like venture capital, hedge funds, and so on is a good idea. That's what advocates say. Now, I mentioned fees a moment ago. Private investments, generally speaking, come with higher fees, oftentimes quite a bit higher. They often have some liquidity constraints, and generally there's less transparency compared to your basic index mutual fund. So this is all going to have to get worked out with the guidelines that the Department of Labor and the Securities and Exchange ultimately come up with. But that's a consideration. And that means more complexity for business owners, companies that offer 401ks, because we had a very well-worn path of what employers should offer in terms of 401ks. It's been well established. If you do these things, you're in a safe harbor and you're not open to liability. Well, it seems at face that the inclusion of these assets with likely more complexity in terms of fees, liquidity, transparency, and the like, it makes it tougher on employers and fiduciaries that offer 401ks for their employers. We're going to have to see what legal protections are put in place for employers, given the inclusion, of the expected inclusion, I should say, of this new series of asset classes to our 401ks. Please note, I'm giving you this information. I want you to be knowledgeable. And as I said at the opening, increase your IQ. This is not something that's going to happen tomorrow. You're not going to get a notice next month about a bunch of new, wild, new, innovative 401k options in your 401k, but it is something that's likely to come down the pike sometime soon. It's something that we will watch because the reality is many of our clients, many Americans, their biggest single liquid asset, that means excluding real estate, usually the home, is assets they have in their 401ks. So this is an incredibly important discussion, but not something that's going to have any changes or impact today or tomorrow. It'll take a little bit for this to unfold, but I did want to share it with you, and I appreciate you listening to today's episode of the Simply Financial podcast. Subscribe to the show if you haven't done so already, Simply Financial with Chris Calandra. Thanks for listening. I'll be back with you on the next episode of the Simply Financial podcast very soon.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.